It's February 21st. JLD here, and welcome to MSTR Today in the Treasury Titans. And look at Michael Saylor. There's no looking back. We are forging ahead. We are going west, my son, going west. We are heading into the unknown, but at the same time, we know where this story ends. Bitcoin, 21 million finality. The Bitcoin gold rush is on. Michael Saylor is continuing to forge into the wilderness, collecting more and more Bitcoin as he goes. He's never going to stop. He's never going to sell. It's the apex predator of the world. It is Bitcoin, the most pristine capital we will ever have in our lifetimes, at least. So Michael Saylor, go west, son. Go west. And Michael Saylor post yesterday, if it's not going to zero, it's going to a million. That got a cool 1.8 million views. And it's true. If it's not going to zero, it's going to a million. I mean, it is just the law that we have ordained when it comes to Bitcoin, that Bitcoin is scarce. Bitcoin has finality. Bitcoin is the apex predator in existence. So we're going to keep driving forward because, as Michael Saylor says, if it's not going to zero, it's going to a million. But what does Fong Lee say? Well, Fong says private credit is under scrutiny. Stretch offers digital credit in a public, transparent, liquid structure built for performance. What's he talking about? Well, the blue owl liquidity, the fact that private credit's having some issues. Well, when private credit has issues, where should that money flee? Where should it have always been in the first place, by the way? How about digital credit in a public, transparent, liquid structure? By the way, built for performance. Let's go. All right. Good stuff, Fong Lee. I love it. To all those that are in Blue Owl, my sympathies are with you. Michael Saylor says, we mitigate Bitcoin volatility to create digital credit stretch. We amplify it to create digital equity, MSTR. So what happens? They mitigate Bitcoin volatility, which will always be there, to create digital credit, which is stretch. They amplify it to create digital energy, which is MSTR. Stretch is at the lowest end of the spectrum. MSTR is at the highest. And guess what? Stretch is only going lower for volatility. That's my prediction. We'll see what comes true. And by the way, I don't think I mentioned this at the beginning of the video, but nothing in this video is financial advice. And I don't think I mentioned this either. I hope you're having a great weekend because at the end of the day, we're all going to win at an incredible level. And just because the ride right now isn't fun for a lot of people doesn't mean you can't try to enjoy other things in life. And I hope you are. Strategy Maxi says, MSTR and Bitcoin are quiet this week. Don't get fooled. Look past the price action and trading action. Zoom out to the macros. The macro setup, best environment we've ever seen. Banks, regulators, and big money are all in on Bitcoin. Listen up. Well, I'm listening, and I hear the same thing. Mark says, MSTR MNAV keeps going higher, 1.22x now. I remember when it bottomed out here. I remember when it bottomed out there. I started adding when it got to about here. I mean, I add every day, but I started adding in large numbers as it was obviously reversing the trend, so to speak, of this complete decompression down from, 2 plus MNAV all the way down to a flat 1. It's been crawling out of it. We'll see where it goes. We're going to need Bitcoin to cooperate for sure. That's always going to be the case. Rob says, echoing Saylor, Bitcoin's volatility is the price of admission to hyper-Bitcoinization. MSTR stacks on. And yes, MSTR will keep on stacking. Chris says, people ignore the fact that since its launch, the vast majority of Stretch's existence has been during a Bitcoin bear market where demand has been intermittent. What happens during a bull market where demand is sustained? I mean, that's to me the exciting thing here. And by exciting, I mean really exciting. What happens when, not if, because we know it's when, but what happens when Bitcoin sentiment shifts? What happens when Bitcoin's price action shifts and we start going higher and higher and higher? And of course, a pullback, but then higher and higher and a little pullback and then higher. What's going to happen when Stretch is just there, pegged at 100, ATMing its face off, 100 million every single week, stacking more Bitcoin? Saylor's hitting the ATM for MSTR, stacking more Bitcoin. I mean, we're talking 10 to 1,020 Bitcoin a week during the next run-up is what I'm expecting and foreseeing. And to me, that's just so exciting on so many levels. And we have an incredible clip from Michael Saylor coming up right now. So sit back, relax, and enjoy.
In fact, the more money you raise, the more profitable you become, the more shareholder value you create. It's a very simple idea. Flip the polarity from negative to positive, and then you just get stronger every single year, and you'll get more powerful. But as you can see, right, the reason that you can't capitalize on the Mag 7 is the SEC 40 Act. And you can't capitalize on the S&P Index because the SEC 40 Act. I guess in theory, you could capitalize on gold. Interestingly enough, no public company has really done that. And the point that I make to the gold bugs is even the gold miners don't do that. And if the gold miners aren't doing that, then there must be an issue. I don't know what the issue is, but what I do think is the general tendency of corporations is you throw away your money to the investors, and the investors buy the index, and that's how they keep their economic wealth intact. And that's good for the investor, right? That's why Harvard Endowment and Yale and Harvard and all of these large institutions, that's why they have a 500-year life expectancy. They just buy a capital asset like real estate or equity. And the reason that your favorite company lives for 5 or 10 or 15 years and goes bankrupt is because they don't have any assets, right? It's like, again, I've said before, they're like type 1 diabetics, right? They can't store energy.
When you want more, start your business with Northwest Registered Agent and get access to thousands of free guides, tools, and legal forms to help you launch and protect your business all in one place. Build your complete business identity with Northwest today. Northwest Registered Agent has been helping small business owners and entrepreneurs launch and grow businesses for nearly 30 years. They are the largest registered agent and LLC service in the U.S. with over 1,500 corporate guides, real people who know your local laws and can help you in your business every step of the way. Build your business identity fast with resources, forms, and step-by-step guides, even before creating an account. Sign up to manage your business hub with lawyer-drafted documents. Northwest is your one-stop resource, makes life easy, and keeps privacy automatic, never selling data anywhere. Don't wait. Protect your privacy, build your brand, and get your complete business identity in just 10 clicks and 10 minutes. Visit www.northwestregisteredagent.com/JLD free and start building something amazing. Get more with Northwest Registered Agent at www.northwestregisteredagent.com/JLD free. Scams and identity theft do not start with hackers. They start with your personal data being easy to find online. Your home address, phone number, and employment history can be sitting on dozens of websites right now, waiting to be used for fake loans, targeted scams, or worse. That information is spread across people's search pages, shady directories, and commercial databases you've never even heard of. That's where Incogni comes in. Instead of spending hundreds of hours manually opting out of these sites, Incogni automates the entire process. They hunt down your data and demand its removal. Incogni doesn't just do this once. They continuously monitor these sites in the background to make sure your data doesn't reappear. I recommend the unlimited plan because when something isn't covered automatically, Incogni's custom removals feature lets you send in a specific link and a dedicated privacy expert takes care of the manual removal for you, start to finish. Remember, if they can't find you, they can't use your data against you. Take your data back risk-free with Incogni's 30-day money-back guarantee. Use code MSTR for 60% off an annual plan at incogni.com/MSTR. That's INCOGNI.com/MSTR.
Bitcoin is insulin. It's insulin to the type 1 diabetic, right? If you're a company, you need Bitcoin. It's like your insulin. All of a sudden, you can store economic energy. You're not doomed to decapitalize yourself. Our company's raised a lot of money. We raised a ton of money via equity issuance, a lot of money by bonds. And in the last 12 months, we've really rotated to raising capital via preferred stocks and preferred credit instruments. And that has taken off. Now, what is the treasury business model? We're really financial engineers, right? We engage in financial structuring or structuring we're a structured finance company, if you will. And what you can see here is The raw asset is Bitcoin. It's got a 51% ARR and a 43 vol over the past 30 days. If what you wanted was that, you could just buy it. But what we've done is we strip the volatility and the risk off of the asset. So we strip a bunch off with Strike down to 29, then 18, then 15. And Stretch, we stripped it down to 8% in the last 12 weeks. Stretch today, it's targeted at 100. It traded between 96 cents and 107 cents, but it's down to trading plus or minus 4 cents or 5 cents. If that trend continues, the vol on Stretch will go to 1 or 2. And so what we're really doing is stripping the volatility off of the pure economic asset. There's conservation of energy in the universe. Where does the volatility go? It goes to the equity. If I actually convert 50% a year performance into 11% performance, where's the extra performance go? Goes to the equity. So what we're doing is fairly elementary. We're just stripping the performance and stripping the volatility and stripping the risk, and the extra risk, the extra performance, the extra volatility goes to the equity. And that's why a business that has $70 billion in digital capital can create $3 billion of very, very low volatility credit. It's not that different, again, to take a barrel of crude oil and you take crude oil, if you distill it to the highest, most distilled form, you have kerosene. Kerosene is jet fuel. Kerosene is rocket fuel. Now I'm going to make a joke. If you study the history of science, it's full of examples of people that saw breakthrough technology, but they used the technology the wrong way because they were conventional thinkers. The idiom is repaving cow paths. It's like you invent concrete and you could create a 6-lane superhighway and the car could go 90 miles an hour. But instead, I take the concrete and then I put it over a cow path that was meant for a cow that moves 4 miles an hour. And now I've got a paved cow path where cows can now move 4.5 miles an hour. You got no benefit from the technology because you used it the wrong way. Now I'm going to give you an example here. John D. Rockefeller, distills kerosene, and you're in the horse and buggy business. So what do? Well, you create a kerosene lamp, and you put a kerosene lamp in the back of the horse and buggy so that your customers can travel across the country by horse and buggy with a kerosene lamp and read a book. Or you put a kerosene heater in the back of the horse and buggy, and you brag that now you've got a warmed horse and buggy, and you won't be cold while you're in the horse and buggy. But a dude like Ford comes along and thinks, well, maybe we'll just create an automobile and we'll drive with gasoline. Or maybe Boeing comes along and creates an airplane and we just fly across the country. So there's a compelling thing to do with the kerosene, like rockets and jets. And there's gasoline and there's cars. But there's also the trivial application of the technology, which just makes the horse and buggy 1% better. And yet you'll have the greatest business people of the era made all their money with horse and buggies, and they're going to grab the kerosene, put a kerosene lamp in the back of the buggy, and they're going to declare that they've used the technology for the good of their shareholders. And what I would say here is you just have to think different, and you have to think much bigger with regard to what you can accomplish here with this technique. What we do is we accrete Bitcoin per share, right? So our equity investors want more Bitcoin per share. We started with 56,000 Satoshis a share, and we added every single year. We added about 74% more last year and 26% more this year. There's a lot of ways to do it. You can sell equity, you can sell bonds, you can sell preferred stocks, you can sweep cash flows. This is a snapshot of the company's balance sheet. In essence, we're 1.1 levered, we're 1.3 times amplified, and we have 84 years of dividends. When Lehman got in trouble, they were 30x levered, and then they went to 50x levered. At one point, they had $15 billion of equity and $750 billion of assets. right? So I get preached to a lot by finance bros that want to tell me don't get too levered. But what I want to point out is we're not even 2x levered. And literally the leverage is going to 1. That debt is going to go away. So the interesting thing to do here, of course, is to use credit that is equity to amplify your performance, because if you do that, you can do it without credit risk. And it's very interesting. Our future is in credit issuance, right? What I said, the day you were born and the day you figure out why. Why are we here? We're here to sell digital credit. And the product is the credit. And so we just got a credit rating from the S&P. We're the first digital treasury company to get a credit rating. It's pretty much the worst credit rating you could justify. We're starting at the bottom and we're crawling up. And it's predicated upon the Basel Accord, which it suggests that Bitcoin is worth 0. It's 0 capital. So you have a banking establishment that values Bitcoin as 0, but you have the marketplace that thinks it's worth $70 billion. Over time, we will rectify that, just like with accounting standards, we were able to rectify that. And as that gets improved, then our credit ratings will move up. But the significance of a B credit rating is that instead of having access to 2.8 trillion worth of capital, you now have access to another 4.9 trillion. So we 3x the addressable market for credit instruments that we're selling. And the most important thing is to allow fixed income investors and insurance companies to allocate to that part of their portfolio. So we thought that was auspicious. Our ambition is just to continue to improve the credit rating until we're an investment grade issuer of credit.
What's the second best? There is no second best.